Steve Auth, one of the people there just mentioned social utility. What is the social utility of free commissions if they're really not free commissions and there's a hideaway, hidden away about flow of trades?
Well, I think they're referencing, Tom, just getting retail more involved again in the market, which generally is a healthy thing. It's price discovery. And I think having retail investors in the market is something we've really lost since the big Great Depression back in 08, 09. So I think it's generally a healthy thing. You probably saw my piece called Bubble, Oil in Trouble. I would view, I think we've got a couple of bubbles going on here, but not the overall market. I mean, the total market is trading on our numbers at around 18 times 2022 earnings. So and that's against a bond backdrop that's 1.5%. We're not in a bubble yet, and bubbles don't burst anyway until the Fed gets involved. And we think they're a ways off.
If we start, Steve Auth, with the idea that it's not 2000, it's not March of, I believe it was 2001, I can't remember right now, but if we say that we're not bubblicious as we were back then, nevertheless, we have a generation of IPOs, the SPACs, the direct issues and such. Are we fooling ourselves that, yeah, it's different than 2000, but not that much different?
That is another kind of bubble that's forming, right? On the one way, the negative bubble, stocks with a negative story, and then you had the other side of that, like fear and greed on the same side of the trade, basically, with GameStop, right? That's what's going on. What you just alluded to is what I call the good story bubble, and growth investors spend a lot of time trying to go through good stories and find the ones that they think can forward compound at very attractive rates and maybe create the next Apple or Amazon. The problem going on now is more and more of these stories are coming to the market before they're really ready. And it itself is becoming a very speculative game. And what's happening is a lot of people are jumping in simply because, not that they've done the work on that particular story, but because they like the story and the stock's going up or it's going to go up. That's dangerous. You get a lot of people involved in a name without a real concrete reason why they're in it, other than they think someone else is going to buy it higher. And that's a dangerous game to play. So frankly, Tom, on the SPAC side, we are involved there, but we've done, a handful of them out of the dozens that are come to the market at this point. I'm not even sure, it's probably over 100. I think there's going to be some good stocks there eventually, that come out of it once they IPO, but it's not for the faint of heart, and the idea that you're just going to make money jumping in there is not a good idea in my mind.